In uncertain economic times, could energy firms be a safe haven? This is Sectors Up Close, and we're talking energy. President Trump promised to drill, baby, drill. His Treasury Secretary, Scott Bessent, promised to increase US oil and gas output by the equivalent of 3 million barrels a day. And investors initially saw the new administration as good news for America's energy companies. But has it been? Sean O'Hara is president at Pacer ETFs. Sean, are energy firms actually encouraged to drill more in the new environment?
I believe they are. I think there's less restriction. I think they'll open up some more leases. I think there's global demand. I think we're here in the United States, we have a specific advantage in that we have great, solid, large energy companies with huge amounts of cash and cash flow. And so I think it's going to be sort of a new day, if you will, in the energy sector, much less restrictive, much more positive view towards these big energy producers.
Crude oil prices, though, have been relatively flat year to date, haven't they? Does it make financial sense to drill more at the moment?
It does. I mean, what are we at? Like a high 60s number on crude. I think the break-even number is probably down in the mid-20s. So, even if crude oil goes down another $5 or $10, there's still a massive amount of profit there for these companies. I would only get worried about the energy companies and their profitability if we actually got down to a number in the 30s.
Last week, of course, President Trump threatened secondary tariffs on countries buying their oil from Venezuela. This weekend, he threatened to target oil coming from Russia. Is the geopolitical environment good or bad for US producers?
I think that, those two things, we'll see how they play themselves out. I think there's two different reasons, I think, for each of those approaches. I think on Russia, he's really trying to put an end to that war. And that's one of the levers he can pull. But those are not U.S. companies. And so if there are tariffs on foreign companies' production, that's good for U.S. producers. So I think there's sort of a two-edged sword there, if you will, or two different strategies at play here for the president. One is he wants America to be the dominant energy producer. He wants us to be net exporters, not importers of energy. And the other two, the Venezuela and the Russian sanction story, really are sort of geopolitical, trying to, accomplish a certain goal, if you will, that the president has in mind.
Is energy a hedge, do you think, for investors against the uncertainty we're seeing elsewhere?
Well, yes, I think so. I think, part of the challenge in the markets is the elevated PE levels. We're trading at, 22 times earnings for the broad market, higher than that for certain sectors. And the earnings growth expectation is somewhere around 10%. So we're paying 22 times earnings for 10% earnings growth on an overall basis. Energy trades at the lowest PE of any sector. So in a challenged market, obviously there's less room, if you will, for that multiple to contract, if you will. And they generate the most free cash flow yield of any sector. So they're more self-sufficient, if you will. So, for a hedge against the uncertainty, if you just think back to 2022, the energy sector was a big winner in 2022 when the overall market sold off.
Energy demand is, of course, reliant on growth, though. Economic forecasters are starting to tune down their forecast for growth in the US. Is it a good time to buy into energy companies?
I think so. I mean, we have our largest fund is overweight energy. It's been that way for a while. I watch the day-to-day numbers, and when we last rebalanced, I don't think that the energy names were in the top 10, but since that, which is about 2 weeks ago, they've moved into the top 10. That's basically because of market movement. So it means they've gone up and the rest of the market's sort of gone down. I am a little bit concerned about economic growth. I don't think it's going to be a long-term challenge. I think we'll work our way through some of these things here, and I look forward to the second half of the this year to be very, very positive with regard to GDP growth.
That was Sean O'Hara of Pacer ETFs. Don't forget, you can watch more videos on Reuters.com.